I'm Charlotte McLeod with investingnews.com, and here today with me is David Cates, President and CEO of Denison Mines. Thank you so much for being here. Great to have you.
Oh, I'm so excited to be here. This conference is a very important part of our marketing season.
Yes, for context for everybody, we've made it to day 3 of PDAC. Maybe we can start with just a quick look at what you've been seeing and hearing on the show floor. I heard it's busy.
It has been busy. I was out here Sunday morning. Look, a lot of positive energy around natural resources in Canada. That seems like an obvious thing, but it's a major improvement in sentiment that we've seen over past years. The public seems to understand natural resources are an important part of our Canadian economy.
Yes, it sounds like people outside the sector are finally starting to come in a positive way, so it's great to hear. And it's our first time talking, but it's coming really at the perfect time. Just last week, Denison announced a final investment decision for the Phoenix ISR uranium mine, so congratulations, very exciting. And I believe that will make it the first new large-scale Canadian uranium mine in over 2 decades. So we can see the significance. Maybe you can talk me briefly through that process, because we know this doesn't happen overnight.
Oh, no, yeah. Natural resources is a long-term business, and our Phoenix deposit was discovered by Denison in 2008. We delineated, made a discovery of another deposit nearby, the Griffin deposit, in 2014. And then since then, it's been a significant amount of technical de-risking, project evaluation. And it was really in 2018, 2019, where we made the decision to advance the Phoenix project as an in-situ recovery uranium mine. And since then, it's been environmental permitting, environmental assessments, Indigenous engagement, design engineering, procurement, and all of that leading up to our final regulatory approvals to start construction in February, and then shortly thereafter, that final investment decision.
I think it's great to just hear all the items that are involved. And it sounds like now that you've made that final investment decision, things can really kick off. It looks like site preparation, construction actually start this month in March. So can you lay out the next steps for us?
Yeah, to be ready to actually start construction so quickly has been a major accomplishment for us. We've been blessed with a great project, and that's what's allowed us to work over these last several years to be at this point where we can execute. And owing to that really rigorous regulatory process, we've had some extra time, and that's allowed us to build detailed plans. And so we are truly ready to start construction, and as you mentioned, we'll start site preparations and construction this month. Because our mine's an in-situ recovery mine, we have a much shorter construction timeline. We're not sinking a shaft or opening a pit. We're not building a big mill. We're drilling a series of vertical or near vertical wells that are like a water well that'll go from surface into the ore body. And we're building a process plant. We don't have a tailings facility to build, and we have a small workforce, so not a large sort of work camp either. But what that does is it means that we're really on a 2-year construction timeline. That's probably in the range of 2 to 3 years shorter than if we were building a large underground mine. We also benefit from the fact that we have infrastructure where our project is. We're on the road, and we have access to power. Actually, Sask Power, the provincial utility, has already installed the high voltage connection to the main distribution line at our site. And so that helps us to have that very short construction timeline and puts us on track for first production by middle of 2028.
Okay, so that's the time that we'll be looking out for. And I think anybody who is involved in the mining industry knows that sometimes the best laid plans can go off track. So how do you make sure that you stay on track? Because of course we need that uranium today.
Well, the most important work has probably already happened. Detailed design is at a really advanced stage. We're roughly 90% on total engineering for the project. I mean, for those that maybe aren't as familiar with the mining industry, many mining projects are starting with much lower engineering, and the engineering is finished as the build happens. So we're essentially or very close to fully engineered before we start. So that is a significant de-risker. And then it's really about leveraging our team that we've built over the last few years. We've onboarded now construction management firm, which is Wood. They're international engineering procurement firm. They have worked with us through the engineering design as well. So that team is not having to ramp up. We're really continuing the work that we've already done, and that helps us to ensure that we have as seamless an execution as possible.
All right. Well, we'll definitely be watching to see how that progresses. And I think it's also important to highlight where we are in the uranium cycle, how
Hmm.
the mine will be entering into. So let's talk about that. I know experts see very positive long term fundamentals for the sector due to tight supply, growing demand. Where would you place us in that cycle?
Yeah, look, we are seeing demand evolve at a very rapid rate. Global adoption of nuclear power is happening as fast as it ever has. I've been in the industry 18 years. We have not seen the type of tailwind for demand ever like this. And it's happening after a period of very low prices. So that's what puts the supply side sort of behind. Very few projects have had the kind of investment that we've been able to justify in our project. And so we don't have a pipeline of construction ready projects. When you look at global projects that can come to the market in a meaningful size, multi-million pounds a year production, there are few, if any, other than Phoenix, that can come to the market before 2030. And then even the ones that could come sort of in that post 2030 range, most of them aren't yet incented by prices. We haven't quite got there. There's a few real top tier assets that are likely to move ahead anyways, but aren't pre 2030. And then after that, again, it's the assets that we will need much higher prices.
Well, that's a great point. What do you think is the incentive price for most projects out there at the moment?
Well, every project is
Yeah.
different, right? They'll stack up differently. If we try
Sure.
to search for that marginal project as the last one to come on,
Yeah.
it's a bit theoretical. But we can look at the signals from players that don't have the top tier mines, and we can see that there's still hesitation on investment. We can look at Cameco. Cameco has existing producing assets. They have mines that they've already shut and they've not turned back on. So it tells us that those mines, now they're not top tier, the ones that are not turned on, but we haven't triggered those to come on yet. So it's likely that we need that second tier, third tier of asset before we can actually get to that fourth tier asset that is the one that balances the market. So I think we're quite a ways away from it. And again, owing to like a decade plus of low investment, we don't have this deep pipeline of rich, top tier projects. The other part of our industry that's really curious is that the growth projects, the best ones, they're not in the major miners' hands. If you look at the other commodities, right, gold or copper or any of the base metals, usually the biggest players have the next asset ready to go. In our industry, our big players are Cameco, Kazatomprom, and Orano. And none of them have top tier, low cost, large scale assets ready to develop. So we have to rely then on the independent intermediates like a Denison, or even beyond us, we're going to be looking at ASX listed companies with projects in Africa.
Yeah, that is really interesting, and it raises questions about what maybe the M&A landscape could end up looking like. Do you think those large producers would want to come in and start lining up their next supply?
Well, look, some of the producers have talked extensively about discipline. That's an understandable thing because we've gone through a period of very low price. But we've also not seen them yet invest in growth on their own portfolio. So it tells me they're a little bit away from making that M&A type plunge. But I think that's really to the advantage of the independent intermediates. It allows a company like Denison or even a NextGen to advance an asset to the place where it will be the most valuable before the majors start looking at adding to their project portfolio.
I want to go back to what you were saying about the market and the prices because we're doing so much better in terms of prices than we were a few years ago even. But people are looking at these positive supply and demand fundamentals and they wonder what is the next catalyst going to be that helps us break higher, maybe get to those better incentive prices. So do you have a particular point in mind for that?
Yeah, look, in our industry, sometimes it requires shock of some degree. We've had supply shocks in the past, mines, flooded mine that no longer will produce on time.
Some dramatic events,
That
yeah.
sort of thing. We've seen demand shocks, maybe not in a spur of the moment shock, but the growth of China in the last cycle was very rapid and they were very active in buying. I think this time around, it's a more natural price discovery process that's going on. So we are seeing demand come to the market through utilities in contracting, and they usually use a request for proposal type structure where they will bid it out to the market.
Right.
And what we've seen is that prices are moving up in response to that interest.
Yeah.
So they're discovering that the depth of supply isn't there. And to secure the material they're looking for, they're having to accept higher prices.
Right.
Now, that's a pretty normal thing, but for our industry, seeing that progress more gradually is actually really important, because it means we might avoid this concept of a very temporary and an outrageous spike, and we may actually work through the process of figuring out what price is necessary for sufficient supply to meet demand. It's much easier to run your business when you have a predictable or more gradual price move.
Yeah.
And essentially, the customers are trying to find the product. If they can't find it, the price moves up, and then maybe they've found it. That's a much healthier way. So I don't think we're going to see, well, I hope we don't see something too dramatic, because it sometimes leads to an unexpected outcome. Mines that shouldn't be built get built because of a very temporary high price moment. So I'm hoping that we can avoid that and really discover the necessary price in a more sustained way.
Right, right. And utilities, they're such an opaque part of the market. At Phoenix, are you already having conversations with utilities about the uranium from Phoenix at this point, or how does that look?
Yeah, look, we're active on multiple fronts with future customers. We're a bit unique in that, of course, we are talking about supply from Phoenix, but we have a large physical holding of uranium already in storage. We purchased 2.5 million pounds U3O8 in 2021 when the price was sub 30 US. Today we have a price that's in the $80 to $90 range, and we are monetizing some of that to be able to fund our construction at Phoenix. So we're able to offer utilities material over the next 2 years. And we also have active production right now from our McLean Lake joint venture, where we're producing using the saber mining method with our partner Uranium. So we're able to market all three of those sources to the customers, and we see great interest from future customers, primarily because they want to buy Canadian uranium, and we have multiple sources of Canadian uranium.
Well, and that leads in, I did want to bring up your other projects as well. So you mentioned McLean North. You also have a pretty significant position in the Athabasca Basin. So how are you going to balance working at your other assets as you move forward at Phoenix? What's the plan?
Yeah, Phoenix is critical for us. Phoenix is where we will be focused. It has a very reasonable capex price tag on it, 600 million Canadian. We'll divert our financial resources primarily there. In the background, we're of course staging ourselves with a production profile. So our Griffin deposit will be moving forward through evaluation and assessment so that we can queue it up to be able to produce and use the cash flow from Phoenix to develop it. Beyond that, we do have a very sizable exploration portfolio, and we've made multiple investments in other players in the region, primarily juniors, where we've taken assets or projects that we wouldn't necessarily work in the next 3 to 5 years, and we've put them into their companies. We still have an interest in a minority interest in the project, and we own usually in the range of 20% of their company. So that'd be like a company like Cosa Resources, which is TSXV listed, Foremost Clean Energy, which is NASDAQ listed, and we have also a significant partnership with Sky Harbor Resources. We have a historical equity position there, but we've also formed some new joint ventures basically adjacent to our Wheeler River property. So we'll be exploring as part of our DNA domestically on our projects, but also have our partners exploring so that we really are exposed to discovery in the region and can add it to our production pipeline.
Well, and that is another topic I wanted to cover. So the Athabasca Basin, that's a uranium hotspot, and I was going to ask if your mine moving forward helps to catalyze other assets in the region and help them get on the way. It sounds like yes.
Well, absolutely. I think Denison's success is no doubt a success that our partner companies can leverage. What we're doing with Phoenix, it will be the first in situ recovery uranium mine in Canada. And so we are opening up a new trail for mining in the region, and many of the deposits that could be out there could be amenable to our mining method. But historically, companies stopped looking for deposits in the same geologic setting where we have Phoenix. And that's owing to some of the history around the Cigar Lake mine, which is situated similarly, but really struggled with water inflows and flooding during development. So everyone started to look for basement-hosted deposits. We're sandstone-hosted. And I think the fact that we're de-risking this and developing an ISR mine in a sandstone-hosted deposit can open up the frontier of where the juniors and ourselves look for new deposits. You don't need 300 million pounds to make a sandstone-hosted deposit work if you're going to use ISR mining. And so the spectrum now of what can be economic is much wider. And I think eventually that will have a benefit because we see people willing to look for those again, as opposed to seeking only monstrous deposit sizes.
Right, and that can be critical for filling that supply gap in that case.
Absolutely, especially when we have shorter development timelines for ISR. Again, we're building in 2 years rather than 5 years. That's the kind of thing that if we make, for example, if we or one of our partners makes a discovery of an ISR amenable deposit anywhere near our Wheeler River property, we absolutely would look at can this be successfully mined as a satellite deposit to our Phoenix plant, and the potential then to have a much shorter timeline to get it to market.
Well, it sounds like everything is really coming together. I'll send you back out onto the show floor in just a moment, but I want to ask if you have any final thoughts that you would leave uranium investors with. I think they're usually a pretty savvy bunch, but is there anything they should know that they might be overlooking?
Well, I think the fundamentals are generally appreciated. The test is where will the price go? And, I'm not sure that we can always predict that. So where we vector back to is what can our company do to generate value for that shareholder, regardless of price. And, I think that's where the investors should be looking, is which of these companies will execute and what is their business story. There's a spectrum of companies out there in exploration, development, and it's a tough task, actually, to be an investor and to sift through that. But quality technical reports, reasonable economic assessments, these are clues for sure about the companies that will succeed regardless of the price.
All right. Well, thank you so much for coming on to go over everything that's happening at the company as well as developments in the market. This was really valuable.
Yeah, my pleasure. Thanks for having us.
Amazing. And once again, I'm Charlotte McLeod with investingnews.com, and this is David Cates with Denison Mines.